We are the Acquire.Fi. It's been 1 week since we last recorded. Seems like we're going to do this more often. Nathan, what do you think?
We're making it happen on a weekly basis, trying to bring you guys some regular market updates, keep you up to date with latest and greatest in this wild industry that we call Web3 or crypto or blockchain, depending on who you're asking and what's more popular at the time. If it seems like if people are seeing the numbers go up, we like to call it crypto. When numbers go down, it's all of a sudden Web3 or blockchain. So I think it's a little market sentiment based nomenclature there. But what's going on, everybody? Welcome back, and thanks for tuning in.
Yeah, good to have everyone back. We started doing this weekly because obviously there's so much happening in the market at the moment that covering this every day, it's just a lot of work. But yeah, like Nathan, what's been happening with BTC? Like we've been dumping quite hard, almost 23%. We went at some point almost to 77, I think. We actually thought 77. Yeah, it was kind of doomy.
Yeah, I'm showing 76,500 on here, and this is, let me see which trading pair. This is BTC US dollar on Bitstamp. So depending on the exchange you're looking at, there might be slightly different numbers, but yeah, around 77, maybe a touch under is what we're seeing here, which aligns with a lot some of the numbers that a lot of people were calling for in that 75K region. I've seen people calling this the bottom. I've seen a lot of people saying that the bottom is not in yet. I think it has a lot less to do with what's going on in crypto, because what we've seen in crypto the last month has been nothing but bullish news after bullish news after bullish news. It has everything to do with what's going on with the wider macroeconomic picture of the world, with the war, tariffs, and just overall general economic uncertainty. I don't know. What are your thoughts on the precipitation of this crash the last month and a half?
I think it's very weird because, first of all, fear and greed index has been the lowest since like 2-3 years. Like we got so much bullish news, but nothing moving, and we're still like having some kind of doom mentality all over the place. And you see even on the channels, like people are mostly talking about negative things. But obviously, tariffs are here. There's going to be some more tariffs wars between different countries, and liquidity is very short. So always when liquidity is very short, there's not a lot of money going around, and obviously that makes trading a little bit more harder. But yeah, overall, like I keep saying this to everyone, like just keep DCAing. I think this is my 4th or 5th bear market now. I will call it a bear market because
are we officially calling this a bear market? I mean, come on, we're 52 days. 52 days ago, we were at 110,000. We're only down 30%. I think that's pretty regular in a bull market.
Dude, this is a small bear market for me, at least. There's so much capitulation happening when I talk to different projects, but yeah, definitely like weird stuff happening. There's so much positive news, but we're still just keep dumping. But
yeah, I think that's probably been the most disheartening thing. Some of the stories that we've seen coming out, like amazing things in the last 2 weeks from multiple major SEC cases going in the way of crypto, from Ripple to Pulse Chain to just overall things like meme coins not be considered securities. Just really paving the way for this industry to start being able to do business in the US again. We're seeing, taxes. We're seeing multiple nation states coming on board. Just hit after hit after hit. And we're seeing the price go down and go down and go down. And so that's definitely, I think, for most people, it's probably why we're seeing such levels of capitulation, because a 30% drop is pretty standard amidst the bull run. We've seen it multiple of those every single time. We've seen worse every single time during the last 3-4 cycles here. But just the drop combined with what should be normally any single one of those news stories in the past 3 years would have absolutely sent Bitcoin rocketing. And now we're having 20 news stories in 2 weeks, and the price is going down. Every time we see a pump, like we saw with the strategic reserve announcement that shot us up 12% in a day, immediately just capitulates back down to nothing the day after. So I think that's probably just what's got people so beaten down and just fed up and tired with this market. Though I think we have started to see that kind of, I don't know what if you want to call it, our sentiments just hit rock bottom, where we just got to that kind of the grunge NPC meme where the guy's just like smoking a cigarette with the rattled eyes, where, you know, it's going to take something real serious to push us lower at this point. I mean, we saw within a 24-hour period.
We still need a Michael Saylor to capitulate. Then we're
fucked. But I mean, we're starting to see people, I think, kind of level out, and just kind of get to the point where they're numb or just don't care or done selling, because we saw, news that previously precipitated, this really big tranche of downward, this sell action here from about 95, 96,000 all the way down to the first time we went down to 78. That was all based off the tariff news of first with, Mexico and Canada, and then, potential tariffs for Europe. Well, now just in the last couple of days, we've seen more news just like that. The doubling of the tariffs for Canada, EU threatening retaliatory tariffs against the United States, and Bitcoin stayed rock solid right around 80K. It didn't even flinch. So to me, that's a good sign that people are starting to kind of just be like, and get bored with all this tariff news. I think it's going to lessen the severity of whatever comes next, whether that's, retaliatory tariffs from Europe or, further tariffs by the US against other countries. So I think those are going to still have an impact, but a bit more muted impact than they did previously.
No, the algorithms and the bots can't capitulate anymore. So
100%. On the flip side, we have started to see some good economic data come in here. I need to share a different screen here. Give me one sec. With the CPI and PPI numbers coming in yesterday. The CPI or PPI comes in later today. CPI came in yesterday. Saw the CPI come in actually even better than forecasted. We were forecasted to see a drop from from the 3% year over year to 2.9. We actually came in at 2.8. Now, normally that's something that would really send the markets flying or be a very, very good sign. But again, amidst all of the chaos going on with the war in the Ukraine, uncertainty with Israel, Hamas, Syria, all these tariff wars, the battle between J-Pow and Trump over cutting rates. I think we got the best case scenario where really all it did was kind of stop the bleeding for a little bit. Hopefully the positive PPI numbers will continue to help that. What do you see for the long-term outlook on the CPI and PPI numbers going into next week with the FOMC meeting?
This is pretty straightforward from my side. Like, look at the normal people and look if they have money. If they don't have money, there's not a lot of spending. And if there's not a lot of spending, the inflation will eventually go down. And that's basically what's happening now. Like, I think we will see a lower and lower inflation. And that means also like people just don't have a lot of money to spend on. Also, if the eggs are $10 in the United States, I mean,
they're already back down. They're back down lower than they were before. But I mean, what do you expect to happen? The previous administration killed off how many tens of millions of chickens because of a bird flu scare or something, and now everybody's like, "Why the hell are eggs so expensive?" Well, I don't know. Can you tell me?
Yeah, I don't know, but definitely, like, I'm waiting for inflation to go down. I don't think, like, my expectations, 3 to 4 months, we're gonna see lower and lower numbers, and hopefully that will then start Mr. Fed to print some money. We need some money here.
Yeah, Trueflation, they're already forecasting inflation at 1.8%, I believe. So under the standard 2% that the Fed wants to get it down to. Now, obviously, they're usually 45 to 60 days, a month and a half to 2 months ahead of the numbers that the government uses, because government is, of course, inefficient and slow and terrible at everything. So, I'm not expecting anything crazy out of the FOMC. I'm not expecting to see J-Pow, kind of take a turn on his stance on cutting rates. But you and I have talked, I think, last week kind of on our both, longer term outlooks for what we're looking to see. And I think a lot of things are lining up for around, 2 to 3 months from now where, all the tariff stuff should be figured out by then. We saw the great news of the ceasefire coming into place with the Ukraine war. So hopefully that ceasefire, in the next 2 to 3 months can turn into a lasting peace. We can see, these economic numbers catch up where J-Pow is then forced to capitulate and then start cutting rates. So I think, that all of those things kind of line up timeline wise to see maybe in May, the FOMC meeting in the middle of May, for him to come out and give us some bullish news which will slowly kind of start to lead us up throughout the summer as those rate cuts start to take effect, where we can see Q3 bull market come back.
No, I agree. Like there's always a little bear market during a bull. We are in a little bear market, and as long as the inflation is a little bit high, and we need still Trump to destroy the market so he can refinance the basically United States. But yeah, I think actually you posted it, which was really good. But we've been talking it internally, and as you guys know, we talk with a lot of market makers. We are very in the trenches. We understand pretty well like what's going on in the United States. But basically, from my point of view, like this is very typical Trump play. Like crash the market, crash what you have, get a better deal, and eventually like refinance. And understanding like Trump comes from a what do you call it, housing market background. Like refinancing is totally fine. But again, normal people will suffer for a while. Hopefully, guys who follow this, you guys have a lot of cash behind the scenes, or at least on the sidelines, and guys can DCA. But yeah, that's my take. What do you think?
No, I agree. I think it's kind of the short-term pain versus the long-term pain. We know the longer, that things continue on the way they have, big picture wise, we're digging ourselves into a deeper and deeper and deeper hole. We, speaking as an American, but America still being the world's dominant economy, it's going to affect the rest of the world. So I'm more in favor of the tear the Band-Aid off approach, get the pain out of the way in the short term, so that we can start solving some of these longer term, big picture issues that can lead to a much more severe collapse and economic hardship down the road. We've been kicking the can a long time. You can only kick the can down the road so far. This obviously is one of many things that needs to be fixed, but ultimately, until we get away from a highly manipulatable fiat-based currency and onto something more less manipulatable, then we're going to continue to have these problems. These problems are just inherent with the fiat money system, which I don't think anybody watching this is that's too much of a shocker to you. If we're here, we're here because we understand what Bitcoin is designed and created to do. But for now, this is maybe doing the best we can with what we've got, but obviously still not an ideal situation.
Yeah, and I think like all the gold bugs there that were like very bullish on gold. Gold is still a good asset, and I think a Bitcoin is just the next phase of getting out of fiat system. Like we had gold. What do you call it? The US dollars were backed by gold before, and now it's not. I think now we're gonna go to the same place as we were before, and I think just taking the hits now is better than like just waiting for it. It's gonna be like chaos like for a while. Hopefully, there's not gonna be another world war, but things are looking quite positive. Again, if you have money on the sidelines, I would DCA. It's pretty good strategy.
Yeah, great tweet here by Cook Capital. I don't know if you follow him. He's pretty funny, a little bit of a wild dude, but also pretty smart trader, pretty smart market analysis. With pretty basic but very poignant, very true statement here. All you need to do is DCA until the Fed pivots. It's the same story every time. The Fed pivots and sends markets. That will be true until we abandon Keynesian economics. All you need to do is DCA, spot, and chill. The Fed will pivot. They always do. So, again, be patient, DCA, take advantage of these dips while we got it. Eventually, whether it's, in 3 months, 6 months, or a year from now, the Fed will pivot and markets will do what they always do and start that up only when we get the money printer going and interest rates coming down. So, you don't have to overcomplicate it. I love the simplicity and the humor in that tweet there. DCA until the Fed pivots.
Just don't be an ETH maxi.
Oh God. Yeah.
But anyway, I want to say here, like, it is a good point. Like, money supply will always go up, at least for the past 20, 30 years. It's always gone up. It's not going to change. There's too much depth in the system, and the only way of us going further and further is to print money. And your money is going to be less valued, and real assets like Bitcoin, gold, and some others will go up in value. Even real estate eventually will probably come back if we don't kill the whole population. But
people, a very popular investment, I guess, quote has been, buy land. They ain't making any more of it, right? And that's been very true. Guess what else they're not making any more of? Bitcoin, right? So, I mean, if you're into real estate, or I guess land speculation, same principles apply to hard assets like Bitcoin. So, definitely some if that's words of wisdom that you've abided by in the past, take a look at Bitcoin.
No, I agree.
Also, we're seeing some interesting stuff here. Alts continuing to just take a beating even more than Bitcoin, as Bitcoin dominance, Bitcoin may be down itself, but Bitcoin dominance is at the cycle high. The last time we saw Bitcoin dominance higher than this was back towards the peak of the bull run in 2021. So I don't know, what does that tell you about what's going on in the market right now?
I think we were so over leveraged with memes that they took so much liquidity away. And what's happening now, we are basically resetting the market. And we can see that more and more institutions and VCs are looking at different DeFi protocols that are actually making revenue. For example, Aave's revenue / market cap is at 30 or 33. And this is like normal numbers. If you go to Robinhood or other like institution, let's say like companies, they have revenue based / market cap to 25 to 35. And I think this will eventually happen. Same thing here. Like BTC is dominating it for now. It is the best asset to hold and do nothing. But I think eventually that money will go to DeFi. I think there's such a good protocols already, like making a decent amount of money and putting that money back into buying tokens, that this will eventually change. But again, BTC is the king. You can't really fight it. There's only 21 million of it. Like, how do you compete? But again, like, there was so much shit. There was 2 million tokens launched already this year. Like, where do you put that money? Like, it's so hard. I talk to normal retail people, normies, like, and they ask like, hey, where should I put this money when there's 2 million different tokens? Like, I totally understand, and like it's very hard to pick very good tokens at the moment. But yeah, like my thesis is that we're going back to this, like looking at what they actually make. Is there revenue behind them? For example, Ethereum is now 20th in the list of making revenue a day. They make like 100K or something. That's very little compared to their market cap. And I think this, like, the bubble that we have is gonna reset.
Yeah, it's hard to look at the markets and get excited about anything much besides these short-lived hype narratives other than Bitcoin at the moment. Bitcoin's always been the market leader, and now more so than ever. And then I think the biggest change in the market dynamics or the cycle dynamics have been, like you mentioned, meme coins. They've caused such disruption for a number of reasons. One of which being just compounding the paradox of choice. Like you said, there was one point when I think it was almost like 1 million a day or some insane number of new meme coins being put on the market every 24 hours, which just completely not only steals all the hype and attention, but disperses the liquidity across so many tokens. It's really hard for anything to have sustainable pumps. That's why we haven't had an alt season yet. So
no, absolutely. I'm 100%. That's the reason. And eventually, like this BTC dominance, I think it's gonna go lower. It's not gonna stay or go over 75, I think, or 80%. But who knows? Like wealth funds, sovereign wealth funds are investing in BTC. There's almost every country now like speculating to have BTC. It could be very interesting. But again, I'm repeating this with Nate and you, like DCH and BTC for long term, you can't really go wrong, man. Like it's just a good asset.
Yeah, so despite what many people believe, this is not a get-rich-quick scheme. You need to be looking long term. I think buys here in the low 80s, high 70s are amazing, long-term buys. Even if we do see lower from here, even if worst-case scenario, we go into a multi-year long bear market and Bitcoin drops back down to like 60, right? Like if you're sitting on, if you're planning 5-10 years in the future, you're going to be laughing, thinking about how much you wish you could have bought more Bitcoin at 70, 80K. Obviously not financial advice, but just kind of a little comment on perspective of we can't get caught up in this short-term mentality of, I want to be rich tomorrow. I want to be rich by the end of the year. We got to be looking at this long-term here, like you would with any other investment strategy.
No, I agree. I totally agree with that.
How are you seeing? Obviously, Acquire.Fi, we're most well known for being the biggest M&A marketplace in Web3 and being one of the top OTC and secondary desks. How are you seeing the Bitcoin dominance and just the overall market conditions affecting the M&A and secondaries markets right now?
Yeah, if you go to marketplace and then secondaries up there. Yeah, but you can go there also. But anyway, like there are a lot of sellers at the moment. There are a lot of treasuries that are selling. If you are a VC and if you have a little bit more capital, even high net worth people, like if you guys have good amount of capital, you guys can get very good deals at the moment on most of the top 100, top 200, basically coins, because most of these are like very much selling, and there are some VCs capitulating at the moment. But yeah, what's mega hot at the moment is of course Monad. It's never gonna end. If you go to Monad, I don't know if people know what Monad is, but it's basically backed by Vitalik, another layer one that's gonna be basically replacing maybe Ethereum at some point. People are speculating that Monad is gonna be the next Solana or something similar, but I don't know. I think that's not going to be the case. But again, on secondary, it's $2.5 billion valuation already. That's pretty high, and I think it's going to launch on 5 to 6 billion. If you go back again, another very hot. This is on equities, so this is a little bit different. But if you go a little bit down, and there's going to be Circle there. If you go down, there we go. Everyone knows Circle, right? We use it every day. It's one of the biggest stable coins. But this is what people don't know, is that it's actually going to be doing an IPO this year. So Circle equity has been trading quite fast and quite hot. Last year, I didn't see almost any equities being traded. It was very hard. But this year, Circle for sure has been one of the most traded things out there. Another one that is very hot is Mega ETH. Unfortunately, I don't think it should be. Yeah, probably next one. There we go. Still down. Maybe I missed it. No, it wasn't there. Anyway, Mega ETH is another very hot that has been traded. I can actually show it from here. One sec. People don't know Mega ETH. It's another surprise. What do you think it is?
Something to do. Let me guess. Another L2, an Ethereum fork.
Yeah. So actually, Mega ETH was backed by Vitalik.
One of these
again. Yeah. I'm showing actually my screen at the moment from your.
Oh, okay. So I just found it here.
Yeah, no worries. But we're getting a lot of buy orders for Mega ETH. I'm not sure if the foundation is doing a reassignment, but definitely guys would look into Mega ETH and what they're doing. Despite it's a layer 2, they've been getting a lot of traction, and I think they raised already almost $50 or $100 million, which is kind of a lot. But yeah, very interesting times. We're getting more and more both on the secondary side, the discounts are pretty high, so trading is pretty hard. But on M&A, we're getting more and more projects coming in, and basically existing projects that have been here for around, they are wanting to do some trades, and we have existing projects that are wanting to buy. So what does it mean? The ecosystem is growing, so that's very good. I'm very happy about that, and I think it's a very bullish thing for the ecosystem itself. I'm gonna put you on stage again. There we go. But yeah, I think that's it. Overall, M&A is moving forward. There's a lot of new sellers out there. Launchpads, I see so many sellers at the moment. Obviously, it's very hard to raise money, and if your business is around raising money, what do you do when you don't get it? So yeah, a lot of launchpads are selling. Exchanges are expanding. But yeah, that's it.
Well, I think that is a good lesson for us to look at. We always talk about saving a little dry powder, and I know sometimes this deep into a bull market, everybody's tapped out. We've been buying dips, we've been reallocating and rotating bags and stuff. But for the people that have the VCs out there, the institutions out there that have been sitting on cash, we just went through a ton of deals that are red hot right now that you can stand to capitalize on. So make sure to double down and underline that rule in your notebook there. Always keep a little dry powder on hand for when these opportunities present themselves.
Yeah, and I think there's a lot of funds that are like realizing this, being opportunistic. And hopefully at some point when we grow a little bit more, we can actually start doing this with the community. But let's see.
Yeah, absolutely. That'd be fantastic. Well, speaking of people selling mega amounts of ETH, for those that haven't seen this story yet, Hyperliquid, or excuse me, that's the wrong story. Where are we at here? Yes, the Hyperliquid story. For those of you that are not familiar, Hyperliquid got bamboozled recently here. Their stock or their token dropping 10% after this news hit. But essentially, Jan, I'll let you get into a bit more of the details. But more or less, one of the Hyperliquid vaults had a trader take out a 20x long on Ethereum around $1,900, and then rather than when it was up to cashing out that position, he decided to take out 1.8 million on the margin side of things to get away with a little sneaky deal, which ended up liquidating the trade and costing Hyperliquid and their vault contributors a lot of money. But I'll let you kind of dive into a little deeper on what happened there.
Yeah, this is the problem always with like centralized solution and decentralized. With centralized solutions, if you do this, it's very hard to like manipulate the order book and also the liquidation order book. And how this basically works is that on centralized exchanges, like there's an automatic adjustment on the overall value that you can speculate with. So what does it mean? It means that actually that 20x long would not be 20x long. It would be 10x long or 5x long. And it would basically adjust automatically on a centralized exchange. So if it would be 290 and you put away some of your money and basically it started to remove the collateral, it would automatically adjust. But on here, it didn't adjust. And this is the problem with decentralized exchanges, because everything is decentralized. There's no KYC. You can basically speculate and do these kind of attacks if you want. And this was kind of sophisticated because A, you need to have money, and B, you have to have a lot of different accounts doing this. But actually, on our last cycle, if anyone remembers, and this is the big topic, like who is this guy who did this? If anyone was doing spell and meme, so magic internet money last cycle, there was one guy who was doing the same thing. He was basically taking full amount of debt, speculating with it, and once he made some profit, he basically just left the debt there. And this would never happen with centralized exchanges because you have to always basically settle the position. But yeah, hopefully that ramble explains this a little bit more. But
yeah, it's a great post.
Yeah.
If you want to dive deeper, it's a great post by DU09BTC. I think it's Duo9BTC on X there. He has a whole thread about how it happened and what the results were.
Yeah, I just want to say here, like this could be the end on actually Hyperliquid, or at least a little bit more bearish. I was actually very bullish on Hype, but I don't agree what they did. And what they did after this was that they reduced the amount of leverage that you can do. Obviously, okay, like if you're a decentralized exchange and you don't have any other ways of like attacking this problem, yeah, take the leverage away. But then again, you're basically taking a lot of food away from the table because there's a lot of degenerates that just want to gamble. And second of all, like the experience itself is not going to be that great. So
yeah, that was kind of the whole point of Hyperliquid before, is it was somewhere you could go and anonymously, leverage your face off.
Yeah, exactly. Like, what's the point there? It's gonna be another like decentralized exchange with lower, what do you call it? Help me out here. Lower
Yeah.
leverage.
Yeah, lower leverage rates as well as lower security parameters because of the decentralized nature of it potentially. Or I guess
Yeah.
maybe not lower security parameters, but lower reciprocity barriers, right? We know with centralized exchange, if they get hacked or something gets rugged, the centralized exchange is going to back that in most cases. And there's legal entities that can follow up with that, et cetera. Whereas, with decentralized exchanges or decentralized projects get hacked, you're usually shit out of luck, right? There's no typically team behind that's going to be able to fall back on. There's no reciprocity measures in place to get you your money back. It's just gone. And again, same instance here. A lot of people are like, oh well, who cares? The Hyperliquid team has to eat that 4 million they lost. No, this is a vault. This was contributed to by a ton of different people. So that $4 million, as it says here, was socialized amongst the vault contributors. So again, it was not necessarily the little guys, but it was the degens that ate that.
Yeah, and again, like this is a sophisticated player. He deposited more than $50 million. That's not a small amount. So again, I think it's my speculation is someone from the old school guys, but who knows?
Yeah, a lot of that going on in these markets these days. Speaking of people making dumb choices, losing their asses, fun story breaking out here by Base Carbon. Very good follow on X, really famous OG in the crypto space. And noting on, I'm not even sure who this guy is, but someone going on a rant about how someone got front run by MEV bots and lost nearly 100% of his trade. He sandwich stacked for 216 of a $221,000 swap from USDC to USDT. Well, if you take half of it to actually look into what happened here, he had his leverage at 100%. And he wasn't using the Uniswap interface. He was going through the old V3 swap router. So God knows what the hell he was trying to do, using the old router and having his slippage set to 100%. He was probably trying to pull one over himself and ended up getting front runner by a MEV bot. But always take everything you read on the internet with a grain of salt, because it's too easy to read a headline like this and be like, yeah, fuck DeFi. This is the Wild West. This is why people are getting robbed left and right. It's like, no, because he was being a moron. The tools worked, pretty much exactly how they were designed to. We're all aware of MEV bots and sandwich attacks. Don't set your slippage at 100%, guys. Like, what do you think is going to happen?
No, I agree. But again, like, we're supposed to bring these noobs into this like Web3, and this happens. It's still it's basically still saying that we are not like enough public. We don't have enough good applications to, like, if there are fools like this and it happens, like, we are not foolproof.
Yeah. No, we're definitely not at the UX UI stage where this is ready for mass adoption. This is not something that my dad is ready to start using and trading his retirement accounts with, right? Until we get there, we're not going to quite have that mass DeFi adoption, but there's going to continue to need to be a blend of centralized and decentralized options out there, and hopefully some new tech. We've seen all sorts of stuff with account abstraction and the different ideas that have been successful to different measures of trying to make the DeFi playground a little more safe and user friendly. But good reminder for all of us: check your slippage, and don't think you're smarter than the game, because you're not. We're not, and it always bites back.
Yeah, I agree.
Last probably kind of story I wanted to cover here is just another good reminder, good example of why we're in this in the first place, why Bitcoin is so important. We kind of hinted at this a little bit earlier when we were talking about Keynesian economics and fiat currencies, and all the manipulation that is inherent with that, with what's going on right now with the tariffs to push the stock markets down and to get us better rates for refinancing our $7 trillion in debt that we need to refinance, and all the games that we play here. This is another great example of why Bitcoin is important, for the simple fact of self-custody. I don't know if you saw this. The European Commission is now planning on using Europeans' piggy banks, the citizens themselves, savings, untouched savings, as they call it, to fund their shortcomings for the governments, as well as fund their defense budget, as they are calling it. It's starting to look like Uncle Sam's no longer going to be footing that bill for too much longer, as they have basically since World War II. So Europe is scrambling for new ideas, and what they've come up with is, hey, we'll just take the money that all of our citizens have sitting in their bank accounts, and we can play around with that. So self-custody, guys. If you're maintaining the custody for Bitcoin, this can't happen to you.
No, this is I'm again, like, I've been talking about this for a while. I'm very worried what's happening in Europe. Like, first of all, there's no startup culture almost at all anymore. All the innovation is going away. And I mean, there's endless problems. I don't even want to list them all. But like, again, I agree with Nate here. Like, if you have Bitcoin, you can't, they just can't do this. Like, obviously, don't store your BTC in a centralized system. Don't store them in any centralized wallets or whatsoever. Your keys, your money. This has been the motto for the last at least 10 years for me, or even more. And I think people will realize this, that Europe also has an ECB coming, so European Central Bank coin. And that means that everything will be more and more surveillance. Like, I don't like where we're going, and I think this is just the top of the iceberg. I don't even know what's coming anymore, but a good reminder, keep your money, keep BTC in a non-centralized place.
Yeah, couldn't echo that sentiment more. It's getting scary what we're starting to see out there. The things that people have been preaching about for years and years now are being told us is normal. So yeah, do what you can to defend against that. I think that's one of the things that got me into this industry more than anything is the sovereignty and the transparency and censorship proof nature of Bitcoin.
Yeah, I agree. I think that's it. I think it was kind of a long session again, but as you guys can see, we're getting better at this. The first one was a trial. Now we're getting into a place where I think hopefully this makes sense to listen. We'll be back next week, and we probably even have our own AMA maybe next week for the tier 5, just to give you guys a little bit more updates, what's going on with Acquire, and maybe introduce also Nathan even more, like what's the position here. But hey, guys, I thank you. Please follow our channel. Please like, subscribe. Nathan, anything from you?
Yeah, I was going to say, if you have topics you want us to discuss in the future, whether that's current events around crypto, traditional markets, questions you want to answer about Acquire.Fi, what we're doing, the platform, the tier 5 community, leave a comment in the video. Or if you remember the tier 5 community, leave us, message us. You can, access Jan and I in there. We're chatting with you guys all the time in there. Let us know if you have something you want us to discuss. We're more than happy to do some videos on that in the future here. And if you're not a member of the tier 5 community and you want to find out more about what that is, this, our private community, decentralized DAO venture arm kind of a group there, get a lot of insights on what's going on behind the scenes, get some cool opportunities there. And more importantly than anything, I think it's a great group of very savvy long-term crypto investors and OGs in the space. I know I've learned a lot just in the last 3 months that I've been a part of that group. So well worth it to check that out.
Yeah, thanks, Nate. See you guys next week.